Hello, everyone. This is Travis the Trader coming back to you live on Thursday. This is November the 14th. I wanted to continue with some additional content on some of the ETFs that are out there that I think can help you have a better understanding of different investment products that you can use when trading, when selling, writing premium. This group that I wanted to talk with you today, I think can give you gives you an exposure to emerging markets. One of them is EWW, which I currently do have a position on. EWW is the ETF that tracks Mexico. And again, love to hear your thoughts as to how you might be trading EWW. What are some of the holdings? I know there's like a Walmart Mexico that's in there. You have some of the banks, some of the Mexican banks. Cemex, the cement company, is in there. But it's again, it's just a way to get exposure. It's a way of further diversifying one's portfolio. It's okay when it comes to liquidity. As you can see here, we're in the middle of the trading day. It's got, let's say, about 900,000 shares traded. So the option markets here are not that great, as you can see here. And I've mentioned this before. If you're not really seeing any weeklies, not a great trading vehicle. It's okay. I currently have a position on here right now. I actually have a covered call that was here. I'll get it out for you guys right now. I have a covered call where I was assigned at $66. So Mexico's really been taking it on the chin. I've just been selling covered calls, just rolling it again to just further reduce my cost basis. But again, it might be something that you might be interested in trading. Its IV rank is pretty high at about 50%. Again, you may have to do a little bit of price discovery on this. If you are going to trade this, again, I would keep it small. And if you don't get filled, that's okay. There are other opportunities out there. But again, it's something that you may want to think about. The other one that I wanted to mention is EWZ. And I have traded this before. I currently don't have a position in here. EWZ is the Brazilian ETF. Again, I think its largest holding is VALE. For those of you, again, who might know what some of the other holdings are, love to hear from you guys. How are you trading it right now? EWZ, the liquidity, I think, is a little bit better than Mexico. Again, if we go, let's say, 36 days out, it's okay. Again, if you sell, let's say, the 26 strike price, which is about a 29 delta, getting 50 cents, putting up about $400. This isn't something that would really interest me at this point. In the past, when I used to trade it quite a bit, there seemed to be more strike prices, and there seemed to be a lot more opportunity with the underlying. And now I'm just really not getting that right now. Again, it is liquid, but you're really not getting a whole lot of bang for your buck. Oh boy, I'm really not doing well here today with some of the ideas. But that's EWW, EWZ. And then the last one I was going to suggest is EEM. EEM is an emerging markets ETF. I think it's everything but China, I believe, is what consists of EEM. And again, if we look at the markets here, it's also pretty liquid. Again, it's got the weeklies, it's got monthlies. If we go to the 36-day, let's see. Yeah, there's really not a lot of premium here either between EEM, EWZ, EWW. Here you're looking at the 41.5 strike at a 26 delta for about 40 cents. And you're putting up about $700. Not a great return on capital. I guess if you wanted to make it a little bit more, you could scroll this down to the 43 for $1, putting up about $800. It's okay. It's pretty liquid. It's not really anything exciting. I've traded this before, but for some reason, there's just not a lot of, and again, it's just the markets are telling me that there's just really not a lot of bang for your buck. You're putting up a lot, but you're not getting a lot back. So the risk reward ratio isn't that great from my perspective. But again, I just wanted to share with you some of the ways to expose oneself to emerging markets. And again, of course, and I've mentioned this before in prior videos, is FXI. FXI is China. I don't know if people still view China as an emerging market or not, but FXI, I think, seems to have more opportunity to trade. Let's just go to the 36. It's okay. You're looking at a 30 strike with about almost 50 delta. You're getting about a buck 25, putting up about 600 bucks. That's actually not bad. It's not a bad return on capital. I'm just curious what the probability is there. 65% probability of profit. It's better. Again, just wanted to keep this in mind. I'm not entirely sure I would trade any of these products right now. Again, I do have FXI. I do have a naked put in there, and I'm probably just going to have to roll it until I get assigned. So I may have a covered call situation coming up shortly, but we'll get to that when it happens. But again, for those of you that found value, please subscribe to my channel. Again, I look forward to a thumbs up just so I can continue to put out great content to you guys. And again, love to hear from you guys. What is it that you're trading? What are some of the other emerging market ETFs that you guys might be looking at? Because I'm always looking for other ideas as to some of the other ETFs that might be appropriate for one's portfolio to further diversify one's overall portfolio. So really appreciate it, everyone. And of course, I look forward to seeing everyone in the next video.